Trust preferred securities came about in the late 90s with a regulatory rule change by the Fed in late 96 that allowed banks to have up to half of their Tier 1 capital through trust preferred securities. The reason banks like this is they could get Tier 1 capital that wasn't as expensive as underlying equity. Investors liked it because they picked up coupon or yield from debt securities that were far more return favorable than their senior debt. Regulators liked it because the whole point of granting Tier 1 capital was that you could turn off your cash flows in the event that the bank had credit quality problems. So from a standpoint of issuers, consumers or buyers and regulators, it was a win-win-win. So that market took off starting in 1997. Tens upon hundreds of billions of dollars were issued in the late 90s. The problem arose, though, for regional community banks who have much smaller assets on their balance sheet, would try to issue $1 million to $5 million tranches of trust preferreds. They couldn't get pricing to an attractive level where it made sense to issue, and for them it was almost as cheap to issue underlying equity or common equity and not trust preferreds. So this being the United States, financial engineering took over. The regulators got together with the investment bankers, got together with bank management as well as investors and said, hey, we can fix this problem. We can pool the securities or the trust preferred securities of underlying banks into CDO structures. We can rate them, subordinate them, and then sell them, and that'll increase liquidity, give you guys better pricing, and allow you to benefit from this regulatory rule change. And so the TruPS CDO market started to grow in size in the late 90s, 1998, early 1999, and then it grew to approximately $60 billion pre-crisis.
All investments are subject to risk, including the possible loss of the money you invest. For more information about SkyBridge Capital Multi-Advisor Hedge Fund Portfolio Series G, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.